Good afternoon, everyone. This is Chris Brecher with the Chart Patterns Mastery and the YouTube Live Room. What is today about? Just talking about some of the election trades. So, just a couple of minutes to go over this. So, what are we talking about? We're talking about correlations with elections. So, I thought the first thing I'd do in here is I would go over first what things have happened in elections other times. So, and I thought you'd like this. So, number one is what has the SPX done over a period of, let's say, 30 years? So, give me 1 second. So, what I'm seeing in here is this, and I thought you'd like this. So, forget about any of the other indicators, and I thought I'd show you this. So, this is the S&P index this year. So what I see in here is this. So I see that the markets have rallied into the election. That's very rare. Most of the time, just for this time of year and the election, what I've seen in here is this. I've seen that the markets usually don't do anything, don't do anything. And it's very rare to see this. So a lot of people talking about like buy on rumor, sell on news, or sell on rumor, buy on news, and everybody's going to be happy afterwards. And I just want you to realize that this year we've gone straight up. But let's just go back to many, many other years of this. And I'll show you what we're talking about. So let me get in the essentials room too, just a second. Good afternoon, Essentials Room. So just to let you know what we're going over today is just a couple of minutes about the election, about what's happened in prior elections and sort of correlations. So I just want to show you this, what we're talking about. So you look in here at the S&P, and this year, what you've seen with the election year is the markets have rallied into the election. That's extremely, extremely rare. Because I know most of the time, you look at Stock Traders Almanac, and they've been wonderful about things, Jeff Hurt, about showing historical tendencies. And the key in here of what we see in here is the historical tendencies is that usually November and December markets go up, but usually before that they go down. You can see this last year. So we're talking about now historical, not election. And you see the year before they went down. But look at the election. So this year we've gone up into this. Like I said, very rare. So let's go to 2020. We're going to go back a number of times. And we're going to go to here. And you'll see here is October, November in 2020. Market just flatlined. It's very, very common for the market to have this downward sloping thing like this. Downward sloping thing like this. So that was 2020, and then you went up, regardless of the election. A lot of people thought that, Biden winning would be bad for the markets. I'm not making an opinion one way or the other. All right, let's go into 2016. You're going to see flat line into Trump winning. Then 2012, flat line. Yeah, it's not a coincidence. Most of the time it flat lines. And that also then corresponds to a strong time of year. So keep that in mind. Now, 2008 obviously is different, but I wanted to go back because it's fascinating. If you go all these times, every 4 years, and people talk about, the elections and all that, you're right. The elections, it's usually gone up after the election. That's because beforehand it's done nothing. Well, go and check this out. I mean, we can go back all the way. We can go back to 96, 2000. And what's fascinating is the last time that in the election year, the markets really took off was 1980. And go and check out what happened in 1980. Same kind of slope as now. Markets took off and they went straight down after the election. That's the last time. That doesn't seem, that's, so that's the last time. So very dangerous, because I'd love to show you a bunch of long ideas saying historically this time of year goes up, and that election, it usually goes up afterwards. And I'm not talking about pro-election, pro-Trump, anti-Trump, pro-Biden, pro-Harris, pro-Vance, pro-Walsh, nothing. I'm not saying one way or the other. I'm just talking about historical tendencies. And I want you to see in here that the way I'm looking at it is that it's very dangerous that the markets have rallied into an event. So that's just, I would, like I said, love to show you 8 million long ideas, but I really worry about that. So that's one thing to just have in the overall perspective of your repertoire when it comes to trading. So, just keep that in mind. Now, when it comes to the election stuff, also, it's all about what people are keen off of. And I'll show you what we're talking about. So right now, what are people keen off of? The first thing I'm seeing is polls. You saw the Iowa poll over the weekend, and Sunday night, the ES futures went straight down and the bond market went straight up. Now, one of the reasons for this, now I'm not saying this is right or not, but I'm just saying that when you go to polls, and let me go to this, and before you say, oh, New York Times, you don't like the New York Times, well, that's fine. The New York Times, though, compiles 460 polls. So when the polls narrowed right here, right in here, not there, here, when they narrowed, yeah, guess what? The oil stocks went up, the solar stocks went down, and I'll show you some other ones. Now that they're narrowed again, well, the Iowa poll sort of helped First Solar go up, and I'll show you that. So the Iowa poll came out, and like I said, you don't have to believe any poll. You don't have to believe any poll whatsoever. But all I'm saying is the trader's perception is the poll helped Harris. And that's one reason you saw the bond market go up. Like I said, this is traders' perception. That doesn't mean it's my perception. It's what the traders are telling me. So just keep that in mind. Like I said, interest rate cuts, no. The rally has been basically, yeah, you could say it's interest rate cuts, and the anticipation of interest rate cuts. And you could say maybe it's, popularity of Trump, because you could see when the perception he lost the debate, the markets actually went down. But I don't know. All I know is that we've gone up on this. Now, this is very dangerous. It's a great question on your part. It's very dangerous for a different reason. Because if they were rallying because of interest rate cuts, well, the bond market's done that. It's gone straight down. So the interest rates really haven't gone down. Mortgage rates haven't gone down. And the 10-year hasn't really gone down in yield. It did for a minute. But once the Fed cut, they went back up because it's inflationary. Now, the next thing in here of why the bonds went down, and now I'll go over correlations for you. Number one, when Trump looked like he was coming back in the polls, people think he's going to create more of a deficit than Harris. Like I said, this isn't my call. This is the call of what traders are perceiving. So when Trump, or let's say Vance, did better on the debate, the bond market took a dive. When Harris did better in the debate, or perceived to, interest rates went down or the bond market went up. So just keep that in mind. So, in there, that's the way I look at it. So that's what I see. So I see that the bonds are doing that when it was perceived that Harris was gaining momentum. So once the polls tightened, people are worried about the deficit again. But it's not just that. It's also some other things. Number one, tariffs. And I thought I'd go over these correlations. And this, number two, why are the bonds going down also? Because the perception of tariffs, that if there's higher Chinese tariffs, a lot of people are worried about China dumping the US bonds, or at the minimum, not participating in the bond auctions like they always have, or selling off their holdings as sort of retaliation. So the higher Trump goes in the polls, the same. The traders think that. This Iowa poll, yeah, that's why the bond market went up. So just keep that in mind in there. Now, the bond market selling off at this exact moment, well, maybe the polls have changed back to Trump. Bond market selling off, the ES rallying. It's amazing. So let me show you some other ones that have worked as correlations, at least for the last 2 or 3 weeks. So let me just show you. So number one, I showed you the bond market. I showed you about the polls tightening. Well, there's a number of other things. So what's my favorite way to use the polls other than just polls like New York Times that you might not trust? It's using the Trump stock, the True Social stock. So what you're going to see in here is when the True Social stock went straight up, right here, the bond market went straight down. Now, you might say, well, this went down. Why didn't the bonds go up? Well, because both of them create inflation, create deficits. So that's one thing. But when this did this, when it started going down, look at this correlation. I find this fascinating. And you'll see this. So on the left is Trump media. On the right is First Solar. So First Solar is, like I said, this is traders perceiving it, not me. So just keep that in mind. Traders perceiving it, not me. And just keep in mind the way I look at this. What happened when Trump media went down? First Solar went straight up. It's not a coincidence. Went up a lot. We were long it. We used the Trump media as a tell. So just keep that in mind. So in there, that you use the Trump media as a tell because it's been working. So guess what? The Trump media just started rallying. And the bond market sold off and the ES started rallying. It's not a coincidence. I bet First Solar started selling off in the same time. Sure enough, look at that. Rallied, that sold off. It's not a coincidence. Bond sold off, First Solar sold off. I just find that absolutely fascinating. How about Chinese stocks? What happened to Baidu? It went straight down after Trump media started rallying. To me, the thing that is showing more accurate than the polls is the actual stock. The stock market always seems to know better. So when the Trump media started rallying, you see what happened. It's fascinating to watch this happen. So I find this really interesting. Now, there were a lot of other ones. How about the biotechs? Well, the biotechs, first with the whole thing with Iowa, guess what? Biotechs went up because they're perceiving that Trump is more anti-biotechs. Like I said, it's not my call. It's how the traders are perceiving it. So just keep that in mind. That's the way I look at it. And so that's the way I'm looking at it. So when I'm watching, I'm using this as a tell. I'm using this as a tremendous tell. And, just that's how I look at it. So what are some of the other areas affected? Well, you might say commodities. So you're talking about Trump, that supposedly he's more amenable to getting Russia and Ukraine with a ceasefire. So when Trump media went up, the whole thing with wheat and wheat embargoes and all that, guess what? Yeah, some of the wheat things like this went down. So when Trump media went up, wheat went down. When Trump media went down, wheat stabilized. So very interesting to watch this kind of thing happen. So I've found these correlations interesting. The biggest one I've seen is definitely the solars and the bonds with the polls. Now, there is something interesting here, and this is why we bought First Solar. So the whole idea with First Solar is that definitely, Trump has talked about pro-oil. People perceive that's anti-solar. But if you have tariffs from China, then the solar panels from China, it benefits a domestic producer like First Solar. So if Trump gets in, it could help First Solar. And if Harris gets in, it could help First Solar. And so what happened? Yeah, First Solar went up no matter what. So it's just interesting. That's why we bought First Solar in the first place. So just keep that in mind. That's what I'm watching. Just watching that happen in here. So that's why I like the solar stocks. Now, when I looked at the oil and gas, the problem with this, like the Oxys of the world, why isn't it rallied even though oil rallied? It's just such a big company. Just keep in mind another thing that's really interesting. When you go into this, and we do constant kinds of things like this, and you go into FinViz. Now, I haven't even logged into FinViz. See on how I haven't logged in? Not even logged in. If you go to Occidental Petroleum, which obviously is gigantic capitalization, and you go to the short interest, you're going to see there's a little short float, but it trades so much. And when you go to First Solar, it has a 5% short float to me, and it's only 101 million float. It doesn't take a lot to move that stock. So that's one reason that First Solar has reacted so much more positive to if Trump loses in the polls than Oxy has when Trump gained. So, I mean, that's the way I look at this. Now, I will tell you something right here. Now, I know you had all the conflict in the Mideast, but when right here, when Vance was perceived to have won the debate, yeah, Occidental went straight up, pro-oil. But it just is so hard because, no pun intended, it's like a super tanker. So, I mean, in there. So, just, keep that in mind. That's why I'm not looking at oil or the oil stocks. I like the idea of the solars. I like the idea of playing the China stocks. And that's another thing that's very interesting. Do you take charts and say Baidu's at support? We came in long Baidu and we sold the opening. So because Trump media started rallying, but it's at support. Do you bet that if Trump comes in, he's going to destroy the China stocks? Or is China so big that they're going to do extra bazooka-like stimulus? That's just tough. It's hard to overanalyze like that. So I'm just having a tough time figuring that out. But I will tell you, right now, it's absolutely fascinating to see this. And to see that when DJT went up just now, I called it for you. Look at a 2-minute chart. And then look at the bonds on the right. It's amazing. So and it's a big deal. So I'm just telling you, when you saw this sell off on the opening because of that Iowa thing, you saw the bond market go bonkers. So it's a real interesting situation. So ES supposedly Trump is more pro business. So DJT going up, ES goes up. But the problem is in the long run, like I showed you, the problem is that the bond market is going down so much that it's a great competition for equities. So it's very interesting to see the bond market where it was in mid-May, and the stock market in mid-May was down here. So very interesting to see what happens. So my theory is, if these bonds go down no matter what, and they go to like there. Now, keep in mind the FOMC statement is coming out this week. So maybe that makes a difference. I think it's a no-win proposition. If they lower rates, long-term rates might go even lower. That's what happened last time they lowered rates. If that happens, I got to think the ES goes and fills this gap here. But really, we're not going to bet on that. We're going to bet that nothing's going to happen for 2 days, and anything that does happen is going to revert around the mean. That's what I would do the next couple of days. I would go and look at that. I would go on reverting around the mean. So if the markets are down, you got to think they go close to back to unchanged. Now, our loyal subscribers on Chart Patterns Mastery were watching this 2-minute chart in the NASDAQ, and we were combining chart patterns with theories. So we saw an inverse head and shoulders here. That was a buy. The YM pulled down everything, the Dow futures. And then you started getting a ultra short-term bull flag. So in this type of market, you can try to play the market both ways: bear flags, bull flags. So just keep that in mind. That's the way I look at it. Bear flags and bull flags. That's what you have to look for in here. Because to me, it's so many times we try to play reverting to the mean before an event. Now, keep in mind, the event is going to be after 4 o'clock tomorrow. So we're looking at a lot of indexes of playing them tomorrow because they cast out at 4 o'clock p.m. Eastern. Most people aren't going to know anything about the election by then. There might be some exit polls, very unreliable. But the key is before an event. A lot of times traders flatten both ways. The shorts cover, the longs get out. And that's why you're seeing the markets right now like unchanged. And you'll see it. Yum Brands coming out with earnings. What happened? It opened straight up, and now traders are flattening before the earnings. I've just seen this over and over and over, and I expect the same thing with the election. Now, the only thing with the election, like I said, it's a huge wild card, and I wish I could go back to show you. But if you go to the SPX again and go to a weekly chart like I had, so you see this over here. If you saw the bond market in 1980, you'd see the bond market was doing that while the stock market was doing this. So you got just the same kind of divergence you're getting now. Now, I'm not saying any of it has to do politically, but when you see a divergence between interest rates and the stock market rally into an event, it's a real danger sign. So just wanted to show you all that, what we're talking about in here. And that's what we'll be watching. For me, if I were you, I'd watch DJT like a hawk. That seems to be correlating the most with the markets. So if you see DJT rallying like you have today, you're probably going to see the ES rally. You'll probably see the bond market sell off. So I hope you enjoyed that. Take care, and I'll talk to you later.